If you'd indulge me for another moment, I really want to share some additional perspective from an investment advisor, an academic, and a former Wall Street trader. All the best in their fields. Notice the commonality of these comments. From David Booth, CEO and co-founder of Dimensional Fund Advisors. There's a kind of law of aggregates that's important to express when talking about derivatives and leverage. Here are a couple of examples. Debt. The total amount of debt outstanding is always zero. For every borrower, there's a lender. Stated differently, I'm looking for a debt instrument that doesn't have to be repaid to anyone. Derivatives. The derivatives market is also a zero-sum game. Every dollar that is lost from a derivative contract is gained by someone else. Common stocks. The stock market return is the aggregate experience of all investors, less the cost of investing. In aggregate, brokerage costs are a deadweight loss to society. If someone has a return on a stock portfolio that is greater than the return for the total stock market index, then someone else has to have a return that's less than the stock market. The less paid to brokers, the greater average net return to the public. The implication of all this is that the problem is not debt or derivatives, but how they are used. It's easier sometimes to get extraordinary amount of leverage through the use of derivatives. But if someone loses by taking too much leverage, someone else wins. Adding the comments about stock returns, the main things that need to be addressed are incentives, transparency, and the costs of information. Brokers have the incentives to induce people to trade. The more people trade, the more the broker takes out of the systems. Brokers have the incentive to be opaque rather than be transparent and sell people the worst products because those have the greatest commissions. Finally, banks and brokerage houses shouldn't be allowed to do proprietary trading. They're in the middle of an order flow that enables them to reap huge profits from trading. They aren't smarter than investors on the outside. It doesn't take a genius to look at order flow and figure out how to trade. There are laws against front running, but traders can figure out how to get the benefits of front running without breaking the rules. From Professor Eugene Fama at the University of Chicago Booth School of Business, and widely known as the father of modern finance. I wouldn't trust me or any of my colleagues to write the legislation for an improved regulatory system, since I don't think anyone knows what that should be. And even if we did know what the ideal regulatory system should be, implementation would be impossible, since regulators are almost always captured by the regulated. I still think the only workable solution is really substantial increases in the required equity capital of financial firms so that too big to fail becomes irrelevant, along with laws to enforce transparency for their balance sheets. And lastly, from Paul Jacobson, former Goldman Sachs partner and senior trader, certainly the most talented trader I ever worked with. When I was on Wall Street, I was required to contribute money to politicians on both sides of the aisle, regardless of my political views. This was true in local and national campaigns. So I would strongly argue that politicians are bought and paid for, largely because we don't simply make campaigns publicly funded, at least for large and important elective office. Supreme Court just invalidated even lousy campaign reform too. My next point is that Wall Street per se is a very large group, not just the investment banks. I'd definitely revisit Glass-Steagall. The hedge funds are another issue. Here's another example. Goldman Sachs and Morgan Stanley cannot get together amongst trading desks and collude on a substantial trade. However, just today we hear reports about an ideas meeting of large hedge fund managers. Allegedly, they discuss trading against the euro. But what happens if they take down a sovereign nation and they do it with leveraged capital and acting in concert? Further, if investment banks and hedge funds were to use contracts to allow countries like Greece to hide its debt, then these same banks and hedge funds were to profit from that country's misfortune. This could have unfortunate ramifications. Still, Congress won't address it properly by enacting real lobby reform. They'll look to one-off punish someone. So in conclusion, we need changes in regulation and best practices. But these must be substantive and not cosmetic. For example, recently I heard from a municipal bond professional at a large Wall Street firm in New York who was watching a team at his firm structure financing that most likely would bury a municipal issuer with inappropriate swap risk and high fees. Similar to Grandma, this municipality's decision maker was relying upon the trust and expertise of his bankers. We have been led to believe that Wall Street compensation in the form of restricted stock, and usually for 3 years, we've been led to believe this is a good thing. Yet for this municipal banker, it served as a disincentive to blow the whistle. If he had done so, then he would have most likely risked parting with his last 3 years of earnings and being blackballed from every golf club in Greenwich. It's imperative that we maintain our system of free capital markets, but we've got to address all the aspects of inherent conflicts and flaws. It's obvious now that it's critical for Congress, regulators, and investors to understand all the interconnections between financial institutions in order to appropriately assess risk. Success in this regard will start with character, which can't be legislated. It must be demonstrated by you all. And remember, assume the fish will swim. Thank you.
Timing's everything in this business, and unfortunately we have 6 votes. And the time has just expired on the first vote, so we're going to race up there. I'll be able to come back right after. And in the interim, if there are questions from the audience, are you ready to take some?
Sure.
And I want to say that I'm so grateful to hear this. And one of the things I propose is that Congresswoman Speier and I perhaps can jointly submit your testimony into the congressional record and then get copies of that and distribute it to our colleagues on the floor. Your message is going to get directly delivered to members of Congress.
Great. Thank you very much. It's been my honor to be here. Thanks.
Okay, great. Thanks.